In this video, you will find out what the trend is and what are the best strategies for trend trading. We will look at the different phases of the trend and how we can use it to build an individual strategy. Before that, don't forget to subscribe to the channel by turning on the notification bell and leaving a comment below the video. This way you enter the giveaway for a package of courses worth over 1100 euros. You can find the full terms and conditions on our website trendlineforex.com. The more videos you comment on, the more chance you have to win. And now we move on to what the trend is. Now, trend is the most powerful tool you can use in technical analysis. When price moves in a certain direction, it is more likely to continue in that direction than to reverse the move. Once you know how to correctly read the trend and see that price, for example, is moving in an uptrend, then you are much more likely to succeed if you're looking for long trades only. And vice versa, if price moves in a downtrend, then you increase your chance of more successful positions by looking for selling opportunities only. Types of trends. When analyzing an asset, the first thing you need to start with is determining the trend. The best way to do this is to start with the higher time frames, as they are much more reliable when it comes to chart patterns, candlestick formations, key levels and trends. We have already mentioned the two main types of trends, but let's look at a few examples of each one. First, we have the uptrend. An uptrend is when price creates consecutive higher highs and higher lows. This means that it is best to look for buying opportunities, and this way you guarantee yourself more winners than losers. The main strategy in trend trading is to wait for a breakout of previous high and then a pullback, where you will be looking to enter long. Of course, money management here, as in any other type of strategy, is key, but let's look at things technically. Okay, so here is an example on pound yen. We're looking at the 4-hour time frame, and I've chosen this one because, like I said, when you find the trend on the higher time frames, you can then drop down to a lower time frame and you can look for trades in that same direction. Okay, so we've got here this initial downside move. Price then finds support at this level. It makes a pullback and it begins another downside move, right? This time though, it doesn't break below the previous low like it did here, right? But it pushed off before actually retesting that most recent low, in fact creating a higher low. Okay, we now have our first sign for the forming of an uptrend because we've just broken above previous high, this one right here. Price breaks above it, continues a bit higher, and it then starts the pullback. Okay, now in order to have a confirmed uptrend in this case, we want to see market breaking above this high as well. Okay, so we see the pullback ends right around here, multiple rejections of that level, price trying to break below, couldn't manage to do it, and the next thing we see is market again taking price higher and above this previous high. So in this case, we're looking at this move right here, our first breakout of previous high. We then have a pullback, right? And then we have our next breakout of previous high. Okay, so we now have a confirmed uptrend. In this case, I'll take my trend line 2 and I'll place it on that first low, and I'll connect the first low with that second higher one. Okay, just to be able to see that even easier, I'm going to place another resistance trend line up here, which we have to place on the highest point between our first couple of lows. Okay, so this is our highest point right here. This is our support trend line that forms the uptrend, and this is our resistance trend line. Okay, so I'm going to move the chart step by step now, and we want to see how price action reacts around the support and the resistance trend lines. The first retest of the support trend line, the second one here, as you can see, multiple reactions right around that level, and price then just shoots to the upside, reaching the resistance trend line next, and that's what we expect to happen because we are in an uptrend, right? So we've already got a move of 290 pips, just shy of 290 pips. Okay, we want to see what's going to happen next, and you see how well market respects that resistance trend line up here. Okay, multiple retests again, does it again, not being able to continue much higher, and not every time you will get a perfect retest like you did here and here the first couple of times. Okay, nothing in the market is perfect, and that's why I've chosen to show you this example. But whenever you see a price like this is what we call trend expansion. Basically, the trend becomes even stronger, breaking above the resistance trend line when we're looking at an uptrend. And so what we have to do here is to adjust our trend lines, but that's something that we talk about in the course. That's where I'm showing you how to work with trend expansion and trend corrections. Both are different things in order to maximize our results whenever we trade with the trend. Okay, so we did have multiple reactions at that resistance trend line, and the next thing we see is price pushing to the downside again, coming down to our support trend line, another 140 pips of potential profit in this case. Okay, the next thing we see is again a bounce off of that support trend line and market continuing higher to again retest the resistance trend line, another 290 pips of potential profit. And that thing continues until the trend changes or until price goes into consolidation mode. That's how an uptrend looks like in real market conditions. And like I said, once you create that habit of finding the trend on the higher time frames, you will definitely improve your win rate and have more winning positions. The second type of trend is the downtrend. The downtrend is the opposite of what we looked at in the previous point. This time you have lower lows and lower highs, and accordingly we look for short positions in order to have greater success. So let's have a look at this example here on Euro Aussie, this time on the hourly chart. I just want to show you that on every time frame you can find the trend and you can trade with it as well. Now we had this choppy price action here, and the last move that we saw was this strong push to the upside, price reaching this previous resistance, coming down here and creating a higher low. Now in this case, if we would have seen break above the resistance here, we would be looking at an uptrend. Okay, but what happened instead was we came back up here again, retesting the resistance that we've tested before, and price dropped to the downside, breaking below this previous structure. So at this point we start looking at a downtrend. Now we've got a lower high, and then price breaks below the most recent low here. So what we've got now is this move. Okay, so you can say we've got point A, point B, point C, and this is our point D right here. So the beginning of a downtrend. Now at first we would have to place our trend line like this. Okay, connecting our first lower highs, and then we can drop a support trend line down here, which we have to place across the lowest point of the first couple of highs, right? Now let's see what happens next. Price then just holds sideways for quite some time here, testing the resistance trend line and again pushing to the downside, again breaking below this previous structure, which confirms the downside direction. Okay, now what happens here is we get a break out of our resistance trend line, and in this case, if we do see market breaking above this resistance right here, well then we're most probably going to be looking at trend reversal. Okay, but if we do see price action again continuing lower and violating this previous structure and taking price at a lower levels, then that just confirms the downtrend and we would have to adjust our trend line. Okay, so that's exactly what happens. Price keeps the downtrend, and in this case we would take our resistance trend line, and this is what we call trend correction. Okay, again, I'm not going to go into details. You can check out the course if you want to learn all that. But what that basically is, it's just a structure outside of our downtrend channel, and we have to adjust our trend line, and then based on that new trend line, we have to place the support trend line as well, right? Again, across the lowest point of those two highs. okay? And we can just follow price action and see how it does. You can see that it bounces off from the top to the bottom, and it does it again and again. And that's exactly what I mean when I say that, whenever price starts trending and it trades in a certain direction, the probability to continue in that direction is higher. This is what I'm talking about. Testing the resistance trend line, going down to support, again testing the resistance, going down to support, resistance, support, and it continues doing that for quite some time until the trend reverses or it goes into consolidation. So that's basically what the downtrend looks like. And the third type of trend is called sideways trend, or also consolidation. And this is not actually a clear trend, but again a direction of move, consolidation or sideways trend. This is a case in which the market does not move in any particular direction to the downside or upside, but instead it's trading between two levels for a longer period of time. I mean, it doesn't create lower or higher highs or lows, but it moves sideways. This does not mean that you can't find any trading opportunities, but you will have to use different types of strategies specifically for consolidating market. In this case, the lower time frames might be useful, as well as oscillator types of indicators that will give you an overbought or oversold signals. This type of sideways market is traded from top to bottom and vice versa. In fact, most of the time the market is consolidating, not trending. Therefore, you can choose to trade more instruments on which to use the same entry techniques, and this way to increase your chances of finding potential trades. And now let's see an example on the chart. Here is an example of consolidating market on New Zealand dollar. We're looking at the hourly chart. Previously we had an uptrend, right? Price then reaches this level up here of around 0.716567. It then drops to the downside, finds support right here, which couldn't be broken on multiple occasions, and it then shoots back to the upside. Okay, as you can see, what follows next is a very choppy price action without any clear lower lows, lower highs, higher lows, or higher highs, right? What we see is price pretty much trading sideways. In this case, I would take a horizontal line and I'll place it down here on support and another one up here at resistance. Okay, so in this period of consolidation, if we're trend traders, we have to stay away from the market, because as you can see, this is not a great price action that gives us a clear direction in which we could trade. Okay, however, you could be trading this market. Like I said, you can look for retest of support and then look for price to reach the resistance up here, and then you can sell from resistance down to support. Again, in this case, you would most likely be profitable. Just in those couple of examples here, we've got a potential win of nearly 70 pips on the first trade, and then on our second entry again just around 67 to 70 pips of a potential winner. Now, if you are staying away of the market and you're waiting for price to go back into a trend, you can then start trading and looking for opportunities once you see the breakout, or if you are a breakout trader, you can just wait for that breakout to happen as it did here. Then you can wait for price to come back and retest the support of the consolidation, which should now act as resistance, and that's exactly what it did. And from here you could take your short entries. Okay, like I said, there's many different ways on how to trade consolidating markets. If you want to build yourself an individual strategy which you want to use in live market, you can always get in touch with us and we can work it out together. Over the years, we at Trendline have tested and used a bunch of strategies, but what we found works best is trend trading. It's no coincidence that this is our best selling course too. To see more about the trend trading course, go to our website and you will find it in the courses section. It includes 21 video tutorials over 190-minute duration, as well as 2 hours of mentoring in which you can ask all the questions you have about the trend and how to profit from it. we managed to successfully combine it with several other types of analysis and entry techniques, and this way we achieve consistent results. If you want to learn our full strategy, you can leave a comment below this video and like it, as this automatically puts you in the game where you can win a package of courses worth over 1,000 euros. Full terms and conditions of the game you can find on our website, trendlineforex.com. Why should you trade with the trend? Like I said, you have a better chance of success if you trade in the direction the market is moving than against it. But why is this so? The price of an asset moves based on supply and demand. And if you look at the trend of an instrument and it moves up, it means that the big players invest money in it. And you as a retail trader want to trade with them. You can't move the market yourself. The big investment banks as well as the governments are the ones who determine where the market goes. Their actions reflect on the price chart, and if you trade in their direction, it means that you will win with them. If you trade against them, it is very likely that you will burn out in a short period of time. Okay, there are also successful counter-trend traders, but this means getting used to losing more often than winning. I mean, imagine for every 10 trades to lose 6 or 7 trades and then make a couple of winning positions that will bring you back to positive territory. How long will you be able to trade this way? In other words, in your trading strategy, you should always have money management and trend trading first, and from there you can upgrade it with additional rules. In many cases, you will see that even economic news and factors will support price in continuing the trend that already exists. And now we're going to see a few examples of what the main trend trading strategy is. I'm not going to go into details here, as all this and additional information are described in full in our trend trading course, but we will have a look at a few setups in an uptrend and also in a downtrend. So here's another example of an uptrend on Aussie Canadian. I'm trying to use different pairs just to have different examples, but it all comes down to the same thing. We've got this downside move before current price action, and then what we see is our point A, B, point C down here, and point D, right? So we've got the first indication of an uptrend, right? What I'm going to do now is I'm going to play the trend line, which at first it should have been like this, but then we adjust it across this next low as it is a higher low still. Okay, I'm going to place our resistance trend line up here, and we want to follow and we want to see what's going to happen, where is price going, and is it continuing higher. Okay, now since we're looking at an uptrend, we want to be taking long entries only, which means we only want to buy. Now there's a few ways on how you can approach the market when you're trend trading, but the most basic one is to wait for price to touch the trend line, and you can either enter straight away, which is a bit more aggressive, or you can wait for a candlestick pattern formation or something to give you a signal that price will actually reverse and bounce off of the support trend line. Okay, and when you're looking for target levels, again, you could use the resistance trend line up here, or you can use support and resistance levels, basically key levels, which I'm not going to pay attention to now, since we don't want this video to become an hour and a half long, right? So you see how well price reacts to those trend lines, and here again we've got a trend expansion, so I'm gonna add another one more additional resistance trend line up here, and that shows me that the trend becomes stronger and stronger, right? And if it continues breaking above the resistance trend line, I'm just gonna add more and more of those trend lines, and then I could be looking for trades off of those levels as well. But just have a look at every time price touches that trend line. We've got 50 pips here, we've got about 45 pips on this one, then we have again about 44 pips on this one, and that's what I mean when I say that we should be taking trades only in the direction of the trend, because it doesn't make sense here to look for selling opportunities once you have a clear confirmed market direction, right? So in our course we definitely go into detail and a lot more practical examples. We talk about stop loss and take profit levels, specific trade parameters, and so on and so on. So if you want to learn how to trade based on the trend and how to take the best possible setups, check out the course on our website. Okay, here is an example of a downtrend, and I'm gonna go through this one quickly, and I want to show you something. Now, that's where our support and resistance lines are. Here in the middle, we've also got price, testing this level multiple times, so we can add a trend line there as well. But you also have to learn how to recognize when there is a trend reversal and when it's just a correction, because we're now looking at the hourly chart. And remember what I said in the beginning of the video, that whenever we're looking for the trend, we should be looking at the higher time frames also. Okay, that's where we can actually see what the trend is. Now we're looking at the hourly chart here, and we've just broken above all this resistance right here, and we've actually tested it, and pricing continues higher. So logically you would think that the trend is reversing, but that's not the case yet. If we move up to a higher time frame, the 4-hour time frame, what we see here is we've got this descending trend line, right? Let me just adjust it up here. And here we've got another downside channel in which price is actually trading, right? So I'm just going to delete those so we don't get confused. This is what we're looking at here on the 4-hour time frame. Now, although it looked like we have a trend reversal on the hourly chart, we're now looking at the 4-hour time frame, and as you can see, price is just retesting the resistance trend line. And we've been in this 4-hour trend for quite some time. So what can we expect now? We can expect a continuation to the downside, right? So if I then drop down here on the hourly chart, in this case, I'm not going to be looking for buying opportunities straight away. I would actually wait and see what's going to happen here on the 4-hour time frame. Am I going to see a reversal candlestick pattern like we have one here? We had another one right here, and that could be the case right now as well. So that means we should see a continuation to the downside, and that's how, using the trend from the higher time frames, it will definitely filter out some of the losing trades in your trading, and you will have a much higher probability and therefore a higher win rate. Okay? If you find this video helpful, make sure to comment down below. Let us know, what do you think of that? Do you use the trend as your main tool in your technical analysis? And again, the more you comment on our videos, the more chances you have to win a full forex training, where the trend trading course is included alongside with several other courses. You get 12 months subscription plan to our closed Telegram group, where we send out each and every trade that we take. And you also get 14 hours of mentoring with a pro trader from our team. So an amazing opportunity for you to take your trading to the next level. Make sure to like this video, comment down below, and let us know, what do you think about trend trading and how important it is actually. As you can see, the trend is an extremely important part of technical analysis, and it's always advisable to trade in its direction. This way you filter out most of the losing trades and increase your chances of winning. If you don't have a clear trend, you can prepare a separate market strategy to use in consolidation, or simply move on to the next instrument on your watch list until you find the right market conditions that allow you to trade in a certain direction. However, always keep in mind that a trend will sooner or later reverse or begin a sideways move, so never exceed your risk allowance. And don't get too confident after a winning streak. Write in the comments down below whether your strategy is based on the trend and which trades are more successful for you, short or long. For more courses, training and trading signals, check out trendlineforex.com. In the next video, we're going to talk about support and resistance, how to build a strategy around the key levels, and a lot more valuable information, so stay tuned. Thanks for watching. Please don't forget to watch our last 2 videos, where you can find more valuable information. Check out our channel for more trading related videos. I wish you all a successful trading, and I'll see you next time.